The Malaysian government has embarked on plans to enhance the country's Islamic finance sector. It has shortlisted 2 foreign banks to be licensed as mega Islamic banks with a minimum capital of $1 billion each. Bank Negara, the central bank, said the names of the banks would be announced next year. This is part of Prime Minister Najib Tun Razak's financial liberalisation measures, which were implemented in April this year. Under this policy, the 2 banks would be 100% foreign-owned. Malaysia would also forge new linkages with the Middle East, Africa, Central Asia and Latin America to enhance the international dimension of Islamic finance. Islamic banking experts have lauded this move and say that the inherent features of Islamic finance contribute to financial stability.
The Islamic finance industry has not been affected to a very great extent by the current crisis, largely because of the fact, once again, because they are not involved with anything that is of a highly risky nature, and because they are not touched, or at least not touched directly by interest rate movements.
Malaysia would also take measures to strengthen the Islamic finance architecture to ensure continued stability and resilience of the industry. Malaysia has said no to capital control to contain the financial crisis. The government says that Malaysia is more developed now than during the time of the 1998 Asian financial crisis and therefore better equipped to handle the current financial crisis. The Reserve Bank has also revealed that uptake of the guarantees introduced by Najib in April has been limited to the sukuk market. Sukuk is an Islamic financial certificate similar to a bond in Western finance that complies with Sharia Islamic religious law. The $4.4 billion of guarantee, which is part of the $17.6 billion stimulus package, has played a key role in boosting confidence in the sukuk market, leading to its recovery. Malaysia is the largest Islamic capital market in the world. Islamic bonds accounted for some 58% of total issuances in the market last year.
Certain privileges have been given to the industry with respect to tax deductibility, and this certainly will be very encouraging to the participants of the Islamic banking market. So any kind of government support for any industry will certainly stimulate that particular industry.
Economic experts and bankers also point out that Malaysia's resilient Islamic financial sector has not been affected by the Dubai credit crunch. They say that credit issue is not exclusive to Islamic capital markets, and the problem Dubai is facing has no bearing on Malaysia's structure of the sukuk market or its instruments in particular. Malaysian Islamic banks are also not exposed to the Dubai market.
Of course, in Dubai, there's general consensus that there is a real estate bubble. Compared to Malaysia, we don't have any asset bubble at all. Even if we look at our housing market, there's no big surge in terms of prices or in terms of supply that can be a precursor to what they call an asset bubble. So in the case of Malaysian financial system, it is relatively sound from all different types of indicators that we see.
Economists also say that Malaysia can now look forward to a strong economic rebound after suffering a technical recession early this year. Malaysia's exports unexpectedly rose for the first time in a year as demand from China jumped amid an Asian economic recovery. Overseas shipments climbed 1.6% on a year earlier to $16 billion after falling 24.2% in September. Asia is leading the world's recovery from its worst recession since the 1930s after policymakers pledged more than $950 billion in stimulus measures and cut interest rates to revive growth.
We have been forecasting the recovery in Malaysian exports to turn positive only in December, but it came 2 months earlier. This suggests that the Malaysian exports is picking up quite strongly, and that also suggests that the global demand has picked up not just from the recession-hit countries, but also from countries that are large emerging economies like China, India.
Economic experts also point out that exports to China, Thailand and Australia have also surged, speeding up Malaysia's economic recovery. Financial experts say that a strong Islamic banking industry has enabled better economic predictions for 2010. This, coupled with a sustained export, could add cheer to the festive season as Malaysians gear up to celebrate the new year. Maheshwari Ramakrishnan, Press TV, Kuala Lumpur.